Hey everyone, Crypto Vatsik here. Please like and subscribe to the channel if you enjoy this video, and you can follow me on Twitter at CryptoVatsik for more frequent updates. Nothing of what you're about to see is considered financial advice. These are my opinions only. All right, so let's get into it. So in my last video, I described the Elliott wave theory and why I think that we're working on our fourth wave here before we move to our fifth and final wave up here. So 1, 2, 3, 4. There's some arguments made in that video, if you go back and watch, of why I think this was our third wave here, and we're just making an ABC corrective structure down to our fourth wave here. Where we bottom out is still up for discussion, but I do think we are nearing that bottom before we make our fifth wave. And today I just want to go into some indicators that I'm looking at it that are really significant, and a lot of indicators that people are using to argue both sides, bull and bear, theses on why people are arguing that we're going lower or it's over, or people who agree with the fact that we're still left with a fifth wave here to end this macro bull structure. So today's really just the focus on these indicators, and I think you can take away a lot from it. So I think to start off with it, the bearish thesis is that we still haven't revisited our previous all-time high of 20,000, the main argument is that, or one of the arguments I'm seeing is that the volume is quite low, and the fact that the fifth wave volume should have quite a lot less volume in it than the third and first wave. And so you can see down here, of course, volume is quite complacent. That is true, absolutely. The other argument is that the RSI in the fifth wave is quite it makes a newer low. It doesn't continue the trend upwards. So you can see on our first wave here, we made a high on RSI after bottoming out. Our second wave here, if this was the second wave thesis, that we've completed our fifth wave up here, that we made a new high, and then afterwards we didn't make a new high. So you could say this fifth wave here was our fifth wave. So just bring this over here, and this was our third. And that was 4 there, meaning that our fifth wave, the RSI made a lower low and it didn't make another peak, as you can see the previous 2 peaks on the other waves beforehand. So this is an argument that I'm seeing, the fact that we made a lower low on our fifth wave, which actually made a higher high in price, tends to be a bear market trend after a fifth wave, or bear market indicator after our fifth wave. Contrary to that, the bullish thesis that I'm seeing right now is the fact that the volume in the third wave should be really significant, and we didn't see that here. So the volume in the third wave with Elliott wave theory should be the most significant in the third wave. Tends to be, sometimes the longest wave, and the fifth wave being a shorter wave with less volume than the third wave. And we just didn't really see that. We've kind of just seen this steady, complacent, boring action on volume the whole time. We saw a little bit of a dip above, breakthrough above, but really not enough for me to believe that this was a significant third wave, or a significant volume decrease here. I mean, this has just been kind of stagnant. So in my opinion, that kind of invalidates that theory. The other thing is that when we saw the RSI collapse of 20,000, the bear market began afterwards in 2018. The steep decline of the RSI was quite sharp, and we saw quite the peak, whereas we haven't seen as sharp of a decline on the RSI. We've kind of just seen a steady decline, slowly but surely making lower highs, but the volume, the RSI, to me, just doesn't say that we've peaked at a peak bull market. But of course, everyone has their own thoughts on this and should make their own outcome of it. But that is my thought, at least with these 2 indicators on the Bitcoin chart currently. The other indicator I'm seeing is OBV volume. So this is on balance volume, showing momentum in the market using volume as an indicator. We didn't see that peak spike either that we saw back in 2018. And, I don't want to say that history should look exactly the same, but it does often rhyme, as I always say. So we didn't see that peak. We're just kind of leveling out here. We are technically making a higher low. So we bottomed out here in 2019, and then a higher low and a higher low, and just kind of flatlining here, which isn't really bullish or bearish. You shouldn't really flip bias just based on this, but in my mind, we've found some sort of support on volume, and we're just kind of lagging until the next move. And we're seeing this on OBV volume across multiple exchanges. So this is the Coinbase exchange. We're seeing that we made a high here. We acted as resistance here, and then it actually spiked above and now should act as support as well. So now I want to talk a little bit about the volume that we're seeing, and I'll show you on the next chart here in a second. So now what we're seeing with volume is we see these constant declines in volume, where the price usually retraces in macro bear markets. So you can see here volume declining, price decline, but this was still a bit of a steady grind, but it did precede a big move to the upside. Back here in 2018, the classic bear market that we had, serious decline in volume, very, very, very sharp decline until it broke above, and that's when we saw the first impulse here move back up to about 15,000. Again, a decline in volume here, which had obviously a decline in price, the COVID crash, and then until we broke out again with our next move up, and then again now we're seeing volume decline there. I don't know if I want to count this volume here as a deviation, but either way you can draw it back out. That would just lengthen our time horizon. And eventually we'll have to break out again here and we'll see our next leg up. So my thesis here is that we're getting super close. When you see volume declining like this, it's usually preceding a big move, and I'll show you on another chart here in a sec. So here you go. Again, volume declining significantly here. And I like to draw a median, an average kind of thing here until we broke up. Again, a steep decline until we didn't really break up this time. So, it's interesting here to look at this and see this steep decline, this longer area of low volume, which does tell me that a very big move is coming up. The longer that this takes time to play out, the bigger the move. So you could argue both ways, but I think it's fair to say a big move is coming. I'm leaning towards the upside. But again, volume isn't there until it's there, right? So you don't want to miss out on that next move. And I think the volume speaks to it. And if you joined the crypto world late, maybe you got in up here somewhere, or maybe you bought at the top. You're down 60-70% sort of thing on your bags, and you're considering selling. Again, not financial advice, but if you looked at the previous peak in 2018, people were possibly down more than this, more than we are now, right? And they're saying, okay, it's going to zero, it's time to sell. And say they sell at a 50% loss even. So say they sold down up here somewhere at a 50% loss, and they invested $1,000, so they got $500 left. Well, that means you have to make 100% profit back just to break even, essentially, right, to get back to your 1,000. So it's really tough for me, especially if you're a long-term investor and you really believe in this long term. It's really tough for me to sell bags at a loss. I try to accumulate over time. My trading positions are different. Set your stop losses, set your orders, to get out and cut your position at certain invalidation points. But as a long-term investor, I'm not as worried. I know that the market's going to come back stronger than ever, and I don't want to have to trade those long-term bags back up to break even sort of thing. So dollar cost averaging, I talk about it in my previous videos. It's very tough, I know, to see these levels, but the risk to reward is not great down at these levels, and you could possibly be selling the bottom again. To each their own. Make your own decisions in your own opinion, but that's my opinion right now as we start to enter these low levels of bear market territory, or bottom territory, so to speak. And so I just quickly, I want to clarify what I meant by bear market territory, bottom territory here. In terms of RSI, at least, showing relative strength index of an asset. This is Bitcoin. We saw in our previous bear market, RSI got down to around 43 region here, and then again on the COVID crash, it entered this territory, and now we're entering this territory again. So that's what I mean when I say bottom territory. These are not places that you want to be selling, especially if you're trading. You don't want to be. You want to be looking for longs, dollar cost averaging, in my opinion, these are the best opportunities for long-term investments. And maybe you joined on Twitter recently as well, and you're watching crypto Twitter accounts saying that they're bullish than ever and they're buying, and we're going to the moon. These are accounts that you want to unfollow. You want to follow accounts that are objective, that are not getting excited over just a green candle for a week. The same could be said about these accounts back here in the bear market. We were clearly in a bear market, and every green candle, probably every candle, they're just saying, yeah, we're going to the moon, and we kept declining down. So follow the accounts that are objective. Follow the accounts that don't tell you they know exactly where price is going in the next day or two. Follow the accounts that say it's fine if I don't know. Here's a plan A and here's a plan B, sort of thing. So, those are the people you want to follow that don't make judgments, before they see the price action, or at least don't make certainties. Predictions are fine, but certainties are not. So super quickly, just some things I'm seeing in the news are on-chain data. Cointelegraph sent this out recently, and are saying that on-chain data are showing that Bitcoin long-term holders are continuing to soak up supply around 30,000. So they've got a chart here. Number of addresses with non-zero balance of Bitcoin is continuing to increase while price is decreasing. So I think overall this is just a good sign that people are accumulating, and that people aren't taking their Bitcoin and putting them on exchanges and selling them. So check it out if you're interested. But I think this is more significant than people think. It just takes time to play out. People expect this to have a knee-jerk reaction, and it doesn't, right? So these things play out in time, but I think this is definitely a good indicator, for positive long-term investment, that people are, starting to adopt cryptocurrency or adopt Bitcoin and accumulate. So check them out, Cointelegraph. Another one I wanted to show you quickly is ETH staking. So this is a chart on Glassnode showing the increase in ETH staking. So the blue volume here on users that are staking their ETH, which basically just helps validate their blockchain and develop their validators. And essentially is just increasing the security and development of their overall blockchain. On their website here as well, you could say, what is staking? So staking is the process of actively participating in transaction validation, similar to mining, proof of stake blockchain. So this is on Ethereum 2.0 staking, which I think just overall long term is a really good thing, that people are continuing to stake their Ethereum despite the price in ETH. So the price in ETH is still showing a steady decline, yet we've found levels of significant volume here, and not really declining too much, and actually came back up and showing signs of strength. So check them out. This is on Glassnode as well, and there's other different metrics you can see on other assets in Bitcoin on-chain data. And finally, the last thing I wanted to show you, which I'm sure you've read already in the news, is the new crypto regulatory overhaul or crypto regulation bill. Democrats and Republicans basically came out with a new bill to help regulate and clarify the crypto industry, marking a lot of crypto assets as commodities. A lot of people were afraid of regulation not too long ago, and I think it just speaks a lot to the adoption, overall long-term growth of crypto industry, and I don't see this as a negative. I think I see it as a positive, honestly. We've seen what happens with some sketchy projects. We saw what happened with Luna. I think it's good for newcomers, for investors that don't know what they're doing, to have some sort of regulation. And I think the fact that they didn't come out with an absolute ban is obviously a really good benefit. So this is good growth long term for the crypto industry. Check it out. It's all over the news. This is just CNBC. But I think this is definitely a win for us in the long term. All right, thanks for joining, everyone. I hope you enjoyed the video. Please like and subscribe and share with your friends if you found it helpful. Follow me on Twitter at CryptoVatsik for more frequent updates, and we'll see you on the next one. Thanks. Bye.